Hello, everybody. My name is Nicholas J. Rudy, and today I will be talking about the economic calendar from 4/30/2019 to 5/7/2019. To begin, we have the Red Book. This is a weekly measure of comparable store sales at chain stores, discount stores, and department stores. Sales slowed in the week following Easter to a 5.5% same store year over year pace from 6% in the prior week. We had a 6% prior, 5.5 actual, and I gave this a negative sentiment. The Chicago PMI. Chicago compiles a survey and a composite diffusion index of business conditions in the Chicago area. New orders have been coming down, production is nearly at a 3-year low, hiring is at a year and a half low, and inventories are being drawn out. Prior was 58.7, actual was 52.6, the estimate was 59. Gave this a negative sentiment. Consumer confidence. This index is based on consumers' perceptions of current businesses and employment conditions, as well as their expectations for 6 months, hence regarding business conditions, employment, and income. April's 129.2 beats Econoday's consensus by more than 2 points and includes favorable improvement in jobs hard to get. Prior was 124.1, actual was 129.2, the estimate was 124.2. I gave this a positive sentiment. Next is pending home sales. The National Association of Realtors developed a pending home sales index as a leading indicator of existing housing activity. Pending home sales rose as much sharper than expected to 3.8% in March, which points to extending improvement for final sales of existing home sales in April. We had a prior of -1, actual of 3.8, the estimate was 0.7. I gave this a positive sentiment. Next is MBA mortgage applications. The Mortgage Bankers Association compiles various mortgage loan indexes. The Purchase Application Index measures applications at mortgage lenders. For the composite, the prior was -7.3, the actual was -4.3. I gave this a positive sentiment. For the repurchase, it was -4 was the prior, the actual was -4. I gave this a neutral sentiment. Lastly, finance was a -11, actual was -5. I gave this a positive sentiment. Moving on, we have the PMI Manufacturing Index. This offers an advanced indication of month-to-month activities in the private sector economy by tracking changes in variables such as output, new orders, stock levels, employment, and prices across manufacturing indices. The growth in PMI manufacturers had been modest. Prior was 52.4, actual was 52.6, and the estimate was 52.4, so I gave this a positive sentiment. We have the factory orders now. Factory orders represent the dollar level on new orders for both durable and non-durable goods. The advanced headline of durables side of the March factory orders jumped 2.7%, while ex-transportation orders increased 0.4%, with core capital goods orders up a very sharp 1.3%. The prior was -5, actual was 1.9, and estimate was 1.5, gave this a positive sentiment. The last indicator that we have is the PMI Service Index. This is based on monthly questionnaire surveys collected from over 400 U.S. companies, which provide a leading indication of what's happening in the private sectors of the economy. Abrupt slowing tied to moderate orders was a surprise for PMI services in the April flash, down nearly 2 points to a 2-year low at 52.9. The prior was 55.3, actual was 53, and the estimate was 52.9. I gave this a negative sentiment. Here's the S&P 500. It's currently trading at $2,892.41. As you can see, we keep opening low due to Trump's China negotiation. Here's the crude and Brent oil. As you can see, it's decreasing. It has a spread of roughly 7.75 or 7.4. Here's the U.S. 5-year and 10-year Treasury, spread of 0.204. Gold, currently trading at $1,283.80. Gold market is looking very strong as people are losing confidence in the stock market. As investor confidence continues to decrease due to the trade talks, gold price will continue to increase. Here's the USD and Euro, currently trading at $1 is 0.89 euros. US dollar is getting weaker. As the US dollar rebounds after very positive job gains, the US dollar dipped due to Trump and China's negotiation threats. Here's the US dollar and Japanese yen. $1 is trading at 110 Japanese yen, actually buying us less than a couple days ago. So it dipped due to the Trump negotiation and China tariffs. Here's some market news. On Tuesday, the S&P 500 gets the third straight record high close, while the Nasdaq declines and retreats after Google misses revenues. On Wednesday, the market was very unhappy with Jerome Powell's word choice with regard to the Fed's interest rate clues, and quote-unquote, his extemporaneous choice of adjectives and adverbs caught the market cross-footed, and people are holding him accountable for that. On Thursday, U.S. oil prices took a major hit, falling 3.6% after a larger than expected jump in U.S. inventories was released. Also, U.S. production figures and a stronger dollar did not help the price of oil. On Friday, we had the job postings. So the U.S. created 263,000 new jobs in April to help drive the unemployment rate down to a 49-year low. Jobs were concentrated at white-collar businesses, construction, and healthcare, indicating growth in these industries. On Monday, the markets have not reacted to Trump's statement with regard to Chinese tariffs. Trump raised a threat to increase the tariffs from 10% to 25% on $200 billion Chinese goods. And today, the market continued to open low as the trade talks continue, and consumer confidence and investor confidence is still low. Thank you for watching.